This video will give examples of careers in precious metals using statistical analysis, finance, accounting, and business. Precious metals are bought and sold in a variety of manners and forms. The financing and management of these high-value commodities is an interesting and unique field. Over-the-counter purchases, forward contracts, and future contracts were presented in our prior videos. We will now discuss several other topics, including bullion and options trading. Pool accounts. Silver, gold, platinum, and palladium are all traded on exchanges, and physical metal is stored and shipped to and from bullion vaults called depositories. These depositories include some major international banks that hold the metals in accounts for clients. The metal accounts are similar to bank accounts in that companies may make deposits and withdrawals of metal electronically. The actual precious metal bars are not transferred from a number of mini vaults within the premises, but accounted for from the total pool. These metal accounts are known as pool accounts. This is an efficient way of managing the physical assets of a group of companies by pooling together their metal. The physical metal itself is held as bullion bars. The actual bullion bars of each precious metal accepted on the exchanges are from certified suppliers. Organizations and exchanges like COMEX provide standards and continued audits for approved producers of the bullion bars, assayers, and other service providers. The bullion bars themselves have dimensional and purity specifications. The London Bullion Market Association produces the LBMA Good Delivery lists for gold and silver bars with a list of bullion bar suppliers accredited to meet the minimum standards. These bars are traded at their express value and accepted as deliverable brands to the bullion banks and exchanges. Each bar is marked with the gross ounces and purity or fineness to establish the value. The gross ounce number is the actual weight of the bar, and the fine ounce number is the amount of actual precious metal in the bar. For example, a silver bullion bar of 99.9% purity with a gross weight of 1,000.0 troy ounces will contain 999 fine troy ounces of silver. The fine ounces are used in all pricing of bullion and investment bars. The other high-purity precious metals are not on the exchanges, but sold commercially as bullion bars, powder, or sponge. Sponge is a term used for precious metal powder that has typically been produced by precipitation from solution. Other financial instruments for trading precious metals are called options. They are like stock options in that they provide either an option to buy or sell at a specific price on a specific date. A call option is an option giving the holder the right to buy a certain quantity of a precious metal at a certain price on a specific date. A put option is the opposite, as it gives the holder the right to sell a certain quantity of a precious metal at a specific price on a specific date. Options are called derivative investments, as their value is based on the value of their underlying commodities. They are complex financial instruments used along with over-the-counter purchases and future contracts in multi-part strategies by speculators and hedgers alike. The complex nature of the precious metals markets and their importance in the financial success of companies using precious metals creates important and exciting career opportunities at financial institutions, mining companies, refiners, manufacturers, and others. The International Precious Metals Institute promotes the education and advancement of precious metals technology and business. IPMI is an international association of companies committed to providing technical resources and educational materials, including a series of videos presenting examples of precious metal applications and a variety of interesting and rewarding career opportunities.